This is Alan Bush with the daily financial forecast for Thursday, July 23rd. Starting out with the stock index futures, we have seen a rather tame market with not much volatility this morning. Some support in the overnight trade as the Chinese equity market registered its sixth consecutive gain. Also, we had the leading index coming in up 0.6 against the guess of up 0.3%. So that's somewhat supportive. Longer term, though, we think that the main trend is higher. Technically, we are seeing a double top pattern in the September S&P 500 futures at the 21-26-25 level, meaning that there are probably buy stops building above that point. I would think anybody that's short will possibly look at that resistance as an area for placement of a buy stop somewhat above that resistance. And as you know, markets quite often move to where the stops are likely to be. So technically, I think this double top will be taken out on the upside within the next couple of weeks. Longer term, we feel that stock index futures will continue to advance. And it was just a couple of days ago that we did see some new historical highs in the NASDAQ futures. Now, moving over into the currencies, the dollar index under some pressure now as flight to quality longs are being liquidated. This on news that the Greek Parliament voted in favor of the bailout, so a little less geopolitical risk currently adversely affecting the dollar index. This also supported the euro currency. Also, we did have news that Spain's unemployment fell to a 4-year low, so another indication that the Eurozone economy is improving. Some weakness in the pound after retail sales there showed a decline as opposed to the median estimate of an increase. Also some strength in the commodity currencies, the Australian dollar and the Canadian dollar, as crude oil prices firmed just a bit, and some additional support coming into the Canadian dollar with retail sales in Canada coming in better, up 1%, the guess was up 0.6%. Also in the interest rate markets, some pressure developing now as flight to quality longs are being liquidated with a somewhat better tone to the Greek financial situation. Also, looks like futures are probably at major resistance areas at the long end of the curve, and I'm speaking of the 30-year bonds. So I think we'll probably work lower from here. Keep in mind, though, we do have the next Fed meeting on the 28th and 29th of this month. Virtually, according to financial futures markets, there's virtually a 0% chance that the Fed will raise at the next meeting, but there's about a 58% chance that the Fed will increase at the December meeting. Our feeling is that the Fed will probably delay a rate increase, and I would not be surprised to see the Fed holding off this year and raising rates sometime in 2016. So in spite of that, we have to remain bearish on the 30-year bonds. I believe they have not performed that well for the news. And within the next couple of weeks, I think we can see some new lows for the move for the September 30-year Treasury bonds. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.